Good morning, everyone, and welcome to the Quantum Leap Morning Leap. This is our pre-market trade plan setup for Tuesday, January the 5th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap and head moderator. This is a subscription room. If you'd like to get more information, I'll put contact information in just 1 minute. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that see at Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own trade risk metrics. If you do want to get a hold of me, send me an email at quantumleapfutures@gmail.com. I'll offer you a free trial. There is no website. This isn't a commercial venture. You can always give me a call on my cell phone, 647-545-8065. You will need a Skype account, so we use a Skype chat. So send me a contact request at Doug_McKay. Skype is free and easy to open up. I'll be the one from Windsor, Ontario, Canada. And of course, if you want to see more videos like this, just go to YouTube and do a search for Quantum Leap Futures. And if you like what I do, follow me on Twitter at Crazy2. Okay, so let's first take a quick look at the news, and I forgot to get the news up here, so let me just go into the news. So we really don't have a huge amount of news. We had Canadian RMPI and IPPI. They came out a little off, but not by much. We do have total vehicle sales all day, but other than that, that's about the only news that we have. Taking a look at the macro to micro, I always like to start my day this way. Taking a look at where we are in the trends, I use a 9 EMA, 20 SMA, and a simple candlestick chart, and start with the monthly, work my way down. We've had this beautiful trend. It was challenged in September and August and September, took it back in October, held in December, challenged, held in November, challenged in December, and then we finally have broken in January. And we're currently below the 9 and the 20. So we are challenging this trend right now on the monthly. On the weekly, pretty much the same thing. You know, we've been chopping back and forth. We're in a bit of a consolidation right now, but we are trading below the 9 and the 20, and we do have a possible downward slope and separation on the weekly. On the daily, you can see that we are seeing some weaknesses. Again, possible slope and separation. Although we do have a foo bar, possible Mr. Sneaky. Yesterday was a foo bar, high volume, buying tail. It's almost the size of the body. Now we're getting this inside bar. Now this is on the full session. On the RTH session, we also had a hammer. So there is a possible reversal. This could turn out to be a foo bar Mr. Sneaky tech gap. Tech gap would be closed up in the 2031 area, and that's right at our microcomposite value area low that I'll show you when we get to the composite microcomposite page. But there is a possibility of a start of a downward trend. Even if we close this gap, we could fail off of that 2030 level. Going to the intraday, you can see that this is much clearer. We do have good slope, good separation. We had created a technical gap right here, came up and challenged the 9 from below, closed the technical gap, and have rejected it so far. One thing to keep an eye on is we do have this naked cross up here on the 4-hour, and it's up at 2057. Our 2057, 75, 2058. Our weekly ATR upside target off of our low of the week, which was down in that Monday low at 1980 and a quarter. I'm sorry, yesterday's low, Monday's low, 1980 and a quarter. We still have a possibility within the the weekly ATR, 20-period ATR, to come up and test this 2057.75. You'll see that I'll have it on my chart when we get there. Going to the 30-minute, we've had this downward trend, but now they've come back and challenged it and violated the downward trend. We're above the 9 and the 20, almost getting a situation where we got a possible cup and handle setting up here. Also possible inverted. Let's see if it's been violated to the on the inversion Fibonacci. Yeah, it's not a valid inverted. I was looking at this as possible inverted cup, and this is the handle, but it's already broken above the 61.8. But there is a possible cup here setting up. We'll take a look at it as it progresses. But the trend to the downside has been violated, and you can see that we were talking about this. They created a naked cross right here on that rally last night or yesterday late in the day, and they came down, took out that naked cross, and now they've rallied back up. So pay attention to your naked crosses. You'll find it exceptionally interesting. Again, on the 15-minute, pretty much the same thing, and we've got this possible cup setting up. There's a bit of a naked cross, but this candle really came down. What do we got? The low here at 98.50, and it's basically at 98. These type of naked crosses, I like the price action to move stronger away from them in order to validate. Really not a strong one, but something to keep an eye out. And 1998 and a quarter, certainly going to be a target to look at if we get back below that 2003 and a quarter CLVN. But we do have a possible start of an upward trend here on the 15-minute. Going to the 5-minute, same thing, possible cup. We'll have to wait to see how high this right rim comes up. We got 2012. It really isn't a valid cup yet because the rim is a little bit too low. I like them to be a little bit more even. It's okay if one of the rims is a little off center, but I think it's still a little low to be considered so far. But we'll keep an eye on it. Good slope, good separation to the upside. So again, we're getting this upward push. And let's just take a look at the big picture. This is the hammer I was talking about yesterday. We opened at 2000, and then they sold off, and we went down. We broke below that 91.75. We said if it broke the 91.75, we'd likely come down into the 80 level to close out that naked VPOC, possibly come down to close out the 76.50 gap close. They didn't quite get that low, and then we had that strong rally, and we talked about what would happen if it got back above the 91.75. I was looking for a push up into 94.50, 94, 95 area, and then a possible neutral day setting up with the break of the IB high at 2001. But boy, they rallied it, gave us a neutral day, and then they ended up giving us a neutral extreme. So two things that you want to look for neutral extreme is continuation. Now, usually with a hammer, you want confirmation of a open above the hammer itself. It could happen. We still have a half hour, so we really want, if we want a confirmation of continuation to the upside, we really want to see a close above, an open above the 2009.50. And that would confirm a bigger move up. 22 still is our key line in the sand above, and 20.03 1/4 is our warning line, and our key line in the sand below is still the 91.75. So two things you want to look for when you get a neutral extreme day. You want to look for another neutral day or a continuation. So we've got a possibility if we get above the 0950 and we open above range and above value and we get initiative buyers stepping in and we get a rally, we could get a trend day and continuation up. I tend to look more on the rotational side of things with an upside bias. So what I'm looking for today is I'm looking to see if this 2003.25 holds. They leave that overnight low alone. The overnight low is 92.25. Even if they came down and took out that overnight low and held the 91.75 and then rallied and got above 03.25. But really what I'm looking at is the 03.25 as a gauge to whether or not I want to just buy the dips and keep trying to get to the long side, or if we get below 03.25 to look to the short side to take out that overnight low, at least come down and take a look at this CHVN at 96.50, possibly the overnight low, but anything below 91.75 I'll be looking to the short side again. So I'm really using two key line in the sands right now below us, which is this 03.25, but it's really just a warning sign of the possibility to come down and test the key line in the sign in the key line in the sand, which is the 91.75. But below 91.75, then I'm thinking a test of the low from yesterday, but a move to take out this naked close at 76.50, and then there's a naked VPOC down at 74.50. If we get above hold 03, I'm looking for rotational day between the 03.25 and the 22. Anything above 22, I'm looking for a push up to test this 31.75 area and possibly even higher. Our balance that we just fell out of, the microcomposite VPOC, is at 43.75. So if we get back inside of the longer term value that runs from that October 15th through to today, then I'm looking for a move up into the 43.75. Our average true range right now on the daily is running at 33.84, so we do have room to get there. So let's take a look at what we've got overnight, and we'll start looking at our levels. So overnight, we have an overnight high at 17. That is from the last day of trading of 2015. That was the VPOC. So that is a strong target if we get above that 0950. Our overnight low is down at 92.25. It's one tick above the VPOC from yesterday, which is at 92. And then we've kind of got this double distribution with the, this low volume with too little distributions in it. So key levels to keep, in your target range is 0550. You can see that 0450 was this HVN from yesterday, and then the little CLV or the little LVN here at 0650, and we're trading right there at 0650. So I'm going to be using 0650. I'm going to be using 0450 because it's in the, you could use, if you want to use a smaller target, you could use 05.25, but I think if they get below this 0650, you'll actually see a move down to the 0450. And then the next trade area is going to be the CLVN here at that 03.25. That's going to be our warning line. I'm actually going to use 03 because it's the LVN below this. And here you got a move back to that 05.25 right now. The overnight midpoint and VWAP is sitting here at 0450. It's one of the reasons why I'm using 0450 rather than the 5.25. Below the 03, then I'm looking for a move to test the open in the 2000 mark. But I really expect them to come down here and test this 97.50. And inside, that's our value area high. Inside of value, then I'm looking for a bigger move down. You get the 96.50, which would be your first target. But I'm really looking for a move down to test the 92 area. And then, of course, the key line in the sand, which still remains to be right here at did I get rid of it? I did. I thought I had that on there already. And then if we get below that, then I'm looking for a trip through value. And you can even use the 80% range. If we come down here and we chop around between the 91.75 and the 97.50, and we stay in here for 2 TPO counts, then you got an 80% destination trade setting up and the possibility of moving down to test the lower value here at 85. And then, of course, our daily, based on the overnight high of 2017, 33, is that correct? Did I miscalculate that? 2017 minus the 33.84. Our daily downside ATR target is 83. But if we get below this value area, I expect this to be blown away, and I expect to move down and test the 80.50, and I doubt it'll hold. I think we'll come down and take out these two targets down here. And then our weekly ATR is still the same off of the overnight, the weekly high at 43.50. Our weekly ATR is 77.45, so target to the downside for the week is still 1966. And a break below that, 62.50, 52.50, and the bigger target down here at the 44.75 range. I don't think we're going to get there today. I really think that if we're going to see a rotational day, probably another neutral day, or a move up and set up for a trend day. Above 0950, I'm looking for that 13.25, but really the main target above is going to be the overnight high and the VPOC, the naked VPOC that we left from the last trading day. And then if we come up here and accept that 17 value, I'll push through to 22, and above 22, our daily upside ATR target off of the overnight low of 92.25 puts us at 26, and then above that, a move to test the microcomposite value area low at 2031.75. And then if we get back inside of value, remember our year open, we get a naked close settlement at 36.50, our year open at 37.75, and then we've got those targets at 41 and 43. December FOMC number was 47, and our weekly ATR target is up here at 57.75 with 54.75. So really, what's going to define things for us today is above value. Do we, go up and test? Above range. Do we go up and test that key line in the sand and just chop in between the 91.75 and the 22 again? Or if we break the 91.75, do the bears get aggressive and take us down into the 76.50, 74 range? Not expecting much more than that today. But again, if we get above that 22, we could get another trend day. But the market is telling us rotational with an upside bias right now until we get below that 91.75. So let me make that clear. Right now, our Keltner center line is at 0375. I'd still use the 03. The 24-hour VWAP is 450. We came down and tested that just a couple minutes ago, as I anticipated, and we're now testing that 06 level. Above 06, a move up to test the upper Keltner is going to take us up into that 09. And our overnight VPOC, forgot to put that in there, is still at 0950, although it could shift down to this 05.25 before the end of the Globex. So we'll just have to keep an eye on that. But our overnight VPOC is right there as well at a range high from yesterday. Taking a quick look at gold. Still that 70 level is balanced. The CLVN has shifted from 76 down to 73.90. We're not getting out of this zone real quick right now. Key level above us is going to be the 80 level. If we get above 80 level, then we're breaking outside of the current microcomposite longer term value, and I think we'll get a push up to test that 88 level this time. We got as high as the 83 yesterday, but they've failed to continue to break out of value, and we're back inside of value. Anything below the 74 level, I'd be looking for a move back into 70 and possibly the test of the lower side of the distribution zone at 67.50 down to the 65.60. Below 65.60, I think we'll get a move right through value and down to the value area low at 62. So that's what I'm looking at in gold. Not a lot of movement in gold. I think we see just more chop and consolidation, centered around this 67 to 70 level. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side. One note is I had a talk with individual last night. I'm going to start, I don't know how many crude traders we have here. I'm going to be adding crude to my trading list this year. So I will start doing analysis. I got to set it all up and do some chart analysis and get all my charts set up. So probably I'll phase it in, coming into the end of January. Anyway, that's going to be it for today. Keep it tight, keep it light, and catch you on the flip side.